Welcome to another episode of Insurance Gone Wild. I am your host, Dennis Settlemeyer, and it's my lovely co-host,
Stephanie Lincioni.
Lincioni, not Lincioni, like I always say, right? Lincioni.
No, you actually found another way.
Lincioni.
No, but do I appreciate the effort.
Well, how do you say it then?
Lincioni.
Lincioni.
Not
Cioni.
Cioni. Yes.
It's I-O, though, right? Not O-I?
But it's the C-I. That's the Italian with the ch.
Oh.
Lincioni.
Lincioni. B.
There it is. D.
B.
Yeah.
B. That's what I call her, is B. Well, I think we're going to talk a little bit about some things that could be a little interesting. I think we'll elaborate on some stuff, but for the consumer aspect of it. But I know that we're going to talk about a few things that are sort of going on in the insurance world that affect consumers, and at least eventually they affect consumers. And so what do you got? Let's just start in, because I don't know that, you know how we talk, especially me, I take the long route around.
I know. So basically it's just, I don't know really. I think it's just awareness. This episode is just really more about awareness of, hey, FYI, this is kind of what's going on in the different segments of insurance and what it looks like for people on, from different perspectives. And it's really more of an awareness type thing, statistics, all of that. So, health insurance is the first one up. 60% of bankruptcies in the U.S. are tied to medical bills.
60%.
60. Yep.
Now, of that 60%, does it tell us how many people what percentage had health insurance, what percentage didn't? I'm guessing a lot of them didn't.
It doesn't. Well, no, it doesn't say a percentage. It doesn't have a follow-up percentage, but it does have a little caption that says, yet most of those people had insurance.
They did have insurance.
They did have insurance. So what I would say there, you think about some people living the day-to-day. I hear this all the time. Obviously, this is my world. People are like, so I have coverage, and that's great that it costs me, talking about the healthcare.gov specifically, and they're like, yeah, it doesn't cost me anything a month to have it. I can't afford to use it. So it costs me nothing per month, but I can't afford to go to the doctor and get an exam and get this or that or whatever, because it's a $9,100 max out of pocket, and they do or don't have copays. And we hear that a lot.
Yeah, but I wouldn't think $9,100 would bankrupt the majority of people out there.
No, I will say.
So there's something else, unless they've got those policies like we talked about in the past, one of the other episodes where it's like $50,000, $60,000 out of pocket.
Well, but that's the thing too. So that is something where you have, how much money is it? Because most people are paying something for it, right? How much are you paying for it? And then how much is your max out of pocket? And if you have a family, that $9,100 is one person. But if you have a family, it's at least double that, right? So you're looking at $18,000.
Yeah.
And then from there, it's, okay, do you have something that's covered, not covered? What kind of policy do you have where this has happened?
I just thought about something. Go ahead.
I was going to say, and then certain treatments are not covered because they're not approved. So, you have a lot of, I know people who've gone to Mexico and gotten treatment for certain diseases because they're not FDA approved now, and don't even get me started on all of the FDA and the and all of the schmutz that comes with that. I think there sure is sometimes some positive, but I also think there's a lot of gatekeeping because it's how much can we monetize from this, and we haven't figured it out yet.
Oh, sure.
So you can go to other places. Now, you don't want to necessarily go get some breast implants from the south of the border. I think that's a little dicey. But I don't know. Maybe it is. Maybe it isn't.
Probably
maybe you can find some good ones. Yeah, it depends on the doctor and the clinic and all the things. But and there are some reputable places, Canada, Mexico, that you can go to get specific treatments.
I knew a lady that went down there.
But that's all cash.
She would drive down to El Paso, go across the border to get her dental work done.
Yeah.
Because it was cheaper for her to drive. She could even fly down there cheaper than what she could get it done up here.
Yeah. Oh, dental is, and that's not medical, but well, it can be medical depending on what it is. And what's crazy is your teeth and your mouth. I think I saw something where it was like every tooth is connected. There's something like the different veins and arteries and things, but like your whole mouth thing is connected to
nerves.
The nerves are connected to different things in your body.
I'm going to tell you a story about that.
Is it a good story?
Yeah. A few years ago, I don't know, 2-3 years ago, I slipped and fell on the ice. My feet went out straight out from underneath.
Yeah.
Me, and I landed on this shoulder, and I had problems with this shoulder. And so I started going, my regular chiropractor wasn't in because I thought maybe I just knocked something out of place.
Yeah.
Well, ended up between 3 different doctors, 2 chiropractors and my regular doctor, who is a DO, which is, they can do adjustments too. They're like, no, you just really made some muscles very mad in there. And there's nothing broken, nothing like that. So the chiropractor that I went to, good guy, he does a different style where he has you, one of the things he does, he'll have you lay on your back, looking up, you hold your arm straight up, and he pushes on one arm at a time. And he'll have you look different ways. If you look this way, you look that way, you look up, and your arm goes down. That tells him what vertebrae is out of place, and he adjusts it. It's the weird, I tease him about being witch doctor type stuff. But it works. I don't know how it works, but it works. Well, this particular muscle, he found it was deep underneath my armpit, and I don't remember which one it is. But anyway, one of the things he would do, he'd tap my tooth. He'd tap it twice, like that. And my arm would just fall. And he goes, okay, that's this muscle here.
Isn't that crazy?
It's crazy.
Yeah. So it supports.
So going back
nerves.
to the bankruptcy thing, I just thought of something. Different policy periods. The deductible starts over.
And that too. So if you have, so you can either have a prolonged situation, or the timing just sucks.
That happened right at the timing.
It just sucks on the timing.
So now you're not at $9,100 for one person. You're
now in a 2-month period,
18.2.
That fast.
Yeah, and if it's even longer term, guess what? You're up another.
Now you're hitting another one,
and your deductible is probably going to go up that second or third year anyway, right?
Well, not as a result. That's just so your deductible
not
going
as a result
up
of that. It just went up naturally because of the market.
Yes, because that's how it kind of goes. Yes.
Yeah, it's crazy.
Yeah. No, that's
so I guess I could see it. Yeah, I could see that where $9,100 could put somebody in a bankruptcy situation. However, I thought, now don't hold me to this. And you may know, you may not know, because this isn't really what we get into. But I thought as long as you were making a payment, there really wasn't much they could do. $25 a month, $100 a month, something like that. So, is there some truth to that?
Yes.
Okay.
What I am going to tell you again, this is the stuff where then when you've got certain treatments that aren't necessarily covered, then they require, that is different, and they require payment. So it's not like, I've got something in my eye. I'm so sorry.
It's not a deductible
issue. So you're paying as you go with the treatment. And if this is what's going to sustain you and keep you alive or your child, then you're going to you're going to pay it.
You're going to take out equity loan, home equity loan. You're going to do whatever you can do.
Yeah, you'll live on the street, but you'll be with your person.
60%.
60% of bankruptcies in the U.S. are tied to medical bills, yet most of those people had insurance.
Okay. Most of those, that means 40% didn't. Far as we know, at least 40. No, I take not 60. Of the 60%, say it's 6 people, most of them, which could be 4 or 5 out of the 6, could have had insurance, but the other 1, 2, or 3.
What are you talking about? 6?
I was just saying if there's 6 people, we could have sent 10 people. If there was 10 people,
because I was like, it's 6. Okay, yes.
If there was 10 people, and 60% of them were bankrupt, of the 6 that went bankrupt because of medical bills, the majority of them, which
at least
would be
4,
over 3, whatever that number is.
Right. In that case, 4.
Yeah.
Because you can't have 3.5 households.
So you've got at least 20 to 30% of the people did not have.
Right. And there's absolutely, and there's absolutely truth to.
Okay.
Yeah.
All right.
Okay. Half of Americans say they don't understand their health insurance benefits. Well, I can tell you, I would love to insure half of the Americans. B, they're not my clients. But half of Americans say they do not understand their health insurance benefits. And
it is a difficult thing, and it feels like a moving target constantly.
And I feel like that's low. Because I also can't tell you how many times I hear, I don't really know anything about health insurance, but let me tell you about health insurance. And I'm like, okay, so do you actually know that you don't know anything, or?
Well, let me tell you from my personal experience.
It's a moving target. I get that.
When I go to the doctor, I don't understand the deductibles and all that stuff. And I'm like, it's our policy. And I'm like, what do you mean it doesn't pay for? Now they want me to come in for extra. Like the other day I went, they're like, yeah, in order for us, we need to see you again in 5 months because you've got in 6 months, we got to renew your prescription. And the prescriptions I've been taking for 10, 15 years, maybe longer. Like, well, we need to see you again, do more blood work. I'm like, why? This is new. Like, yeah, earlier this year, the insurance company started saying you got to go in more often so they can show why you need to stay on this medication.
Okay.
I'm like, you know what? I pay cash. So let me tell you what that insurance company can do. Yeah,
and I'm not the billing aspect of it. We've talked about this before, but that is such a.
Oh, it's horrible.
I'm going to call it what it is, a shit show. Like it's horrible. It's a gimmick. It's a game. That part is. Everybody's trying to play a game, and I feel like everyone's not even playing the same game. So. And who ends up getting hurt
I
is
wish
the
we could bring
patient.
somebody in to sit and talk about this, but they probably are not supposed to talk about how that works on the backside.
They'd have to be like that silhouette with the muffled voice.
Yeah, exactly. Yeah. Can we do that?
All right, Paul says we can do it.
Well, we might.
You know what?
I know somebody who is an office manager for a. No, we know somebody else too.
Yeah.
Yes, we could if we that might be something to do. How does this work on the backside?
Yeah,
I don't know. We want to get into.
I don't know. That gets a little dicey. Yeah. But what would be fun on that note? What could we have a whole episode where we sit in the dark and then we're silhouettes? That would be fun. Think about it. Anyway, okay. So more statistics. Jumping into the life insurance. I mean, that would be amazing.
Life insurance. 40% of the people have life insurance. Is that what it's going to say?
No, but there is a 40% statistic on here.
Okay, what is it?
Stop cheating, sir. Eyes on your own paper.
Oh, I didn't look.
Eyes on your own paper.
Some of this I know. Some of it I don't.
It says 40% of people overestimate the cost of life insurance by more than 3 times.
Oh, yeah.
That is absolutely true.
Until you get older, then they underestimate it by 3 times.
Yeah. I mean, yeah. I won't even get into that. But yes. But that, again, you can easily, if you are young and healthy, you can get a policy for under $20 a month.
You can.
A significant policy for less than $20 a month.
Yeah. And how much money will we make off of that?
Less than $20 a month. If you're paying $20 a month, we're not making that much.
We're not making any money, so we don't care how much money we're making off. It's the right thing for you to do.
You just have to have the right. Yeah. Yes, it's at that point. It's okay. So I'll put it more in a question format. It says about blank. Well. Hang on. So about what percentage of households say they would feel the financial impact within 1 month if the primary wage earner passed away?
80%.
It is lower than that.
Then they don't understand where they are financially, which I don't think that's correct. Yeah. I think it's pretty high.
Yeah, I think it should be.
I don't know what the percentage is.
Yeah, it says 1 in 3 households, right? Which would be 33%.
No, that's very incorrect.
Say they would feel the financial impact within 1 month.
No, because here's the thing.
Let me tell you how they're wrong.
Let me tell you.
But I don't disagree.
Let me tell you how you're wrong. Is that when you talk to folks, I would say if you're asking that question as part of a survey, that's probably not incorrect. But the reality is it's incorrect. So how many times? So what do we sit down? We look at what's their debt, what's their income, what do they think their medical expenses might be, education for their kids, things like that.
Yeah, you do dime, I do life.
Dime, life, whatever it is. It's all the same stuff. But the thing is that once you start looking at that number, then they're like, oh, I need a whole lot more than what I thought, because the majority of people and let me tell you where I get this. The vast majority of the people live paycheck to paycheck.
That is the point. It's not even a matter of how much are they getting, or is it too much or not enough or whatever. The issue there, I think, is every time we hear, well, we can't afford it. And then what do we go back to? If you can't afford this policy, you can't afford to not have this policy.
So if the primary wage earner were to pass away, so here's the way that I put it with folks. And I don't say primary wage earner. I don't say if your husband died or your wife died, whoever. I will say if you had a machine that all it did was print $100 bills, would you insure it? And everybody says yes, unless you have somebody trying to be a smart aleck, and then they'll come up with something else. But they will agree that I would insure it. And I will say, okay, well, to you, to your family, you're that machine.
Right.
You're printing $100 bills. And without you as the machine, what are they going to do?
Right.
So.
Hey, I have life insurance. Don't try to sell me, pal.
Just
Unbelievable.
Saying.
Yeah. No, you're absolutely.
So I think that statistic is incorrect in reality, but on a survey, it's probably correct.
Right. Millennials are actually buying life insurance faster than Gen X right now.
Or does it say what type of life insurance they're buying? Because some of the millennials seem to have a better understanding of cash value policies than just straight term.
So it doesn't. But let me ask you this, because I always get confused. Who the hell is Gen X? Is that before or after millennials?
I don't know. You have to look it up. It kind of depends on.
Because there's Gen Y, and that's older than me. So I think it's Gen Y, and then millennial. I am technically a millennial, which vomit. But I am. I'm right on the cusp. I really don't like that title, and I don't like to be associated with that.
So Gen X is 55 to 1980. So I'm Gen X.
Oh.
You're a millennial.
Who's Y? So is Y after millennials?
Y must be after, it's Gen X, millennials, Gen Z.
Okay, so I don't know.
Well, it goes back to do they understand the value of the cash value more? It seems like that more and more of them do. They're a little more open to universal life type policies or something else.
Do you know what else I think, though, as we're sitting here thinking, because we did figure out, so Gen X are older, older than millennials, Gen Y, whatever. Here's something to think about, though. People didn't buy life insurance before also because they weren't given the opportunity. People didn't talk about it. And now we have mass ways of connecting people. So there's social media, and there's email, and there's this, and there's the TV, and everybody has a TV, and there's 75 different channels, and so I think the actual exposure to it has also helped.
Maybe.
I think that's a huge thing, because that's the internet, and all of these different forums have, exponentially changed.
There's tools on there and all sorts of things that we didn't have
But
before.
I do think a lot of them probably are, like, I don't disagree with you with the cash value IQ, right? That because they're into the Bitcoin, and they're into this, and they're into all of these different things.
You get a UL policy, and you get like a IUL, and you started it when you're young. By the time you're 60, 65, how many hundreds of thousands of dollars would you have in there if you're putting $100 a month?
Yeah, and not going to lie, most of them don't have mortgages.
Well, there's that. I'm not going to go down that road, but I understand what you're saying.
Anything else on that?
What do we got?
Okay.
Next.
Number next. Auto insurance. Okay, so I feel like this is definitely an average, but I feel like it's probably low.
Fairly good percentage you're getting ready to throw out?
No, I think it truly is like an average, right? So it's saying per person, but at the same time, and let me just read the thing and then we'll go from there. The average person will file a car insurance claim once every 17.9. For the sake of it, we're just going to round that up to 18 years, which means if you start driving at 16, you'll likely have 3 to 4 claims in your lifetime. Here's what I would say to that. Well, actually, I think that's really low.
I think it's really low for urban areas. Maybe not so much for
City.
the city area, urban, city, suburban.
Oh,
I think as a whole in the United States, that probably would be true, but I think it probably goes, I mean, just think we're in the Dallas-Fort Worth area.
I mean, my car, I had 3 accidents within like 6 months. None of them were my fault. One, my car was parked. Somebody backed into it. Another one, I was at a red light. And then I think it was at another red light.
So I've run into those people. I've been driving for 40 years. I've never had an accident. Well, you're due.
And that's the thing is that
statistically, you are due.
Statistically, and that's fine. So that's
it's
where
every 5 to 10 years in the urban areas.
Yeah.
In suburban areas.
And like something, and it doesn't have to be your fault. It's just something happens.
Correct.
And it's a claim. And then you live in an area with storm stuff, and then you've got that.
High theft.
Yep.
Busted windshields. I mean, there's all sorts of things.
Yeah, because it's not car accident. This says insurance claim. Mm-hmm. So that can be just a number of things. Yeah. Mm-hmm. So I think that's low. I'm going to go low.
I'm going to go low on that.
So wrong. For
our area, it's definitely low.
For sure. Okay. Distracted drivers account for blank percentage of all crashes.
I'm going to go with a high percentage, 70%.
You're going real high. Here's what I would say to you isn't that almost 100? Like, shouldn't it kind of be 100?
It says 25. Distraction?
They do not. Here's the thing.
Well, comp claims.
It has to be.
Collision claims, yes, but comp claims, no.
True. Okay, so
if you look at it that way, probably, because down here, how many hailstorms do we have?
A ton.
Theft do we have?
That's true.
Windshields do we have?
So, and you know what? This is what's so funny. This is why I hate statistics, because you can manipulate any number.
Oh, yes, you can.
You can manipulate it to make any narrative that you would like it to state.
Politicians do.
Mm-hmm. I won't even get into that. But I would say, as far as an actual auto collision claim, also different from comprehensive, where like an animal runs out. Because that sometimes, it's like, what the hell happened to you, dear?
Well, there's 2 companies.
I know we've talked about this, and some of them say it's actually a collision and blah, blah, blah. But if you're just talking about...
Did you hit the animal, or did the animal hit you?
Blah, blah.
If you hit the animal, it's collision.
Right. The animal hit you.
Those 2 companies, they don't do that as bad anymore. But for a while, they were notorious for being known to split hairs like that. I'm like, the deer ran out in front of me and stopped. Yes, I hit it.
However,
I was doing 70 miles an hour. You
Right.
can't stop this truck that quick.
Right.
So
So I would say
collision claims, high
90%.
90%.
High 90. And then we're rounding down. Yeah. Home insurance.
Okay.
What percentage of U.S. homes are underinsured?
Based on what I
And we're in a weird market now because everything is shot up. So if no one's reviewed their policy in 5 years,
under 50%.
Under 50%?
Yeah.
They have 60.
Wow.
They have 60% of U.S. homes are underinsured, often by 20% or more.
Well, 20% plus, I would agree with that. And when I say under 50, I'm thinking in the 40s somewhere. It's a significant number.
That's
but
still
would it
high.
be over 50? I don't know. I mean, I'm looking at one right now, and I'm like, you're $150,000 underinsured.
Mm-hmm.
They live in a very nice area in Colleyville.
Yeah.
All the homes are probably $1 million homes, and he is insured at X. Just a quick calculation in my mind, you need to be X plus, and I'm looking at his policy going, oh, I see what they did. They're playing games here. The other agent is. So do you want me to explain how they're playing games or move on?
No, I'm sure they underinsured to make sure the deductible is lower than they added the
extended replacement
yes.
cost.
Okay.
Yeah.
So I know the games.
Which is not what it's designed to do, but
Correct.
That's the way a lot of agents do it.
Right. Number 1, home insurance claim. What is it?
Well, in our area, it's hail. I'd say wind and hail. the number one type of claim, what the peril is. In our area, it's wind and hail followed by water.
Yeah, but I think water happens all throughout the year when hail just hits so many people at once.
But
water damage, they say water damage.
I'm talking about water, and it could be a slab leak. It could be a overflow of a toilet or washer. It could be the water heater. Anything to do with water, I would say, is the second biggest one in our area.
Yeah. Okay, so industry behavioral statistics.
Okay.
What percentage of people shop for insurance online? Shop. Oh. They're breaking this down. Shop for insurance online.
I don't know, but
how many people take a little looky poo?
I know it's growing, and they get in there and they don't understand what they're looking at, and they end up calling an agent. I don't know, 50%.
80. So they have 80, and then it says,
I don't doubt that.
Yeah, and it says, but still, most buy from an agent or broker.
That's correct. That's what I was getting.
Because exactly what you were saying, like they get in there and they're like, "What?"
Yeah.
So you have 3 policies, because a lot of times you can even go to a direct carrier site, and I'm thinking of one in particular, our former, and they give you 3 policies.
You're like, what's the difference?
I'm like, wait a second. I even was like just playing around. I'm like, where am I getting screwed on this really cheap one? Mm-hmm. What are people experiencing? So you have to call the agent.
Yeah, and I would say the industry has, especially the last probably 5 to 10 years, has tried to figure out how to do away with the agent.
They've tried, but they can't.
And they can't.
We're cockroaches, baby. Can't get rid of us.
I was actually reading
in the nicest way.
I was actually reading an article yesterday, or day before yesterday, in a magazine that we get, industry magazine, about how that has happened. And a lot of these companies that started out like online quotes only, they're going through the agent. Going through the agents now. Some of them have pulled back, and they're trying to do it again, and they're not, because here's the reason why they pulled back though.
They don't want the business.
Slowed growth.
There it is. They don't want the business.
They slowed growth. It was intentional to slow growth.
Absolutely. So it's where they get to say, we're not pulling out of the market.
That's right.
But we certainly don't want anybody's business right now.
Department of Insurance, we're not pulling out of the market.
No,
we're just going online.
We're here. Yeah.
Which slows them down dramatically.
Exactly. And then this says Americans are more likely to insure their cell phone than to have a disability policy.
Yeah, I would agree with that.
Which is nuts. That's nuts.
Our cell phones, $1,000, $1,500 disability. How much do you get out of it?
$1,000, $1,500 a month. It's all a percentage on your income and things like that. But yeah. So that is, and it's about the same cost. Not much more for the disability, depending on when you start and all the things. So that's all I have. Those are my stats. All you got? Well, I can go deeper, but Mama's not gonna. We're at time. We're at time, baby.
We are out of time. Man, that went quick.
It did.
That went quick. That's where we get a little nerdy sometimes on some of this stuff.
Yeah.
But it does make a difference for the consumer, so they understand kind of where things are. And again, that's why you need a really good agent to help walk you through this stuff, so that you aren't underinsured, or you can help avoid bankruptcy, or whatever it may be. You've got enough liability on your auto insurance in the event that you are responsible for a wreck, because what happens now? Everybody's suing people.
Yeah. And I want to add this too. Those statistics, if we have hung on to people for the 29 minutes, but just know with that, you're also not alone. You're not stupid for calling and asking a question.
That's correct.
We get a lot of the same questions, but that doesn't mean that you're an idiot, or that it's embarrassing. It's not embarrassing. It's confusing. If you're not in it, it's confusing.
Yeah.
So ask the question, truly.
Yeah, no, I agree with you. You're better off asking the question and end up with a surprise later.
Absolutely.
And I will also tell you, that's why sometimes people ask questions and agents come back with an answer just like that. We've been asked the question hundreds if not thousands of
Yeah.
times. We already know the answer. You don't know it because it's not what you do for a living.
And that's okay.
It's okay.
It's okay. So but ask the questions.
Yeah.
If you don't know, feel free to ask.
All right. Well, thank you guys for joining us for another episode of Insurance Gone Wild. Reach out to us. You can email us contact@igwpodcast.com, or you can give us a call, 817-753-0093. We appreciate it and look forward to sharing with you again.